Hello friends, this is Raj Sastry from Raj Option Trading. Today is October 1st, 2022. Hope you're all doing well. In today's segment, we'll take a look at how to look at the stocks which are most liquid using TradingView. So with that, let's jump in and get started. Look, when the stocks are most liquid, you can make money by trading them, and also you could make a lot of money by trading options on these stocks. So with that, let's jump in and look at some of these opportunities. Look, from a market perspective, we got here S&P 500. See what's going on here. Market is channeling down. Look, nice channel down here, and you could see a lot of lower lows. Look, lower low here, lower low, one more lower low, and look, lower high, and so on and so forth. Decisively, market is trending on a negative trend right from 2022, as you can see here. When the market is doing like this, there is no point fighting the trend. We should be going along with the trend. So with that, one of my favorite strategy is to look at most liquid stocks and ETFs and do the trend trading using options. You could also do this with the stocks, but it's a little bit harder. You got to short the stock, which is a little bit requires a little more capital. So with that, let's look at capital efficient strategies to take advantage of these trends. So with that, look, we got Nasdaq 100 here. Same story. Look what's going on here. Nice channel down in Nasdaq 100 also. You could do the same strategy here. Go with the trend trading. And you look at Bitcoin here, same story. Bitcoin is also barreling down, as you can see here, and now it's trying to consolidate, as you see here. Could be okay to slowly jump in. On the contrary, the US dollar index, dollar is very strong. Look, dollar is uptrending here with all the Federal Reserve basically increasing the rates. Dollar is getting stronger. And look, we got other indices here. We got here Dow Jones 30, same story. Look what's going on here. You don't make money in this type of market by trading the long all the time. Instead, you could trade and buy and hold great stocks and accumulate. In a year's time, you'll have a nice profit. And look, we got Russell 2000 here. Look what's going on here. Same trend, basically downward with the Fed induced downturn here. Market is really wondering where to go here. Decisively down. So with this, let's jump into the TradingView scanner. I love TradingView scanner. It's a great tool. It lets you scan multiple products at the same time, multiple stocks at the same time. So with that, let's jump into TradingView scanner. So as you go into the product here, you could also look at the heat map. I love TradingView's heat map, one of the top heat map in the industry. As you look to the heat map here, look, there's a nice heat map here. If you don't like a yearly view here or a daily view, you could go into maybe a year-to-date view here. Look, you could go into YTD. Look what's going on here. We got all the tech stocks not doing great, and we have energy patch here doing well with the ExxonMobil up 42%, Chevron up nicely, and we got some healthcare doing well, especially my favorite stock here, Eli Lilly, doing great and fabulous here. And we got right here one more here, Bristol Myers doing very well, and we got Merck also doing okay here, and we got some healthcare services doing very well with UNH and so on and so forth. This is a great view. I love TradingView, the way they put this view here. And best part is you can go and drill down into one of these areas. Look, I go into technology here. Nice technology view here. Only stock, or one of the stock which is up, is Activision Blizzard, mainly because Microsoft agreed to buy this. Twitter is slightly positive with all the saga of Twitter acquisition by Tesla. That's why it's slightly high. So with that, now without any delay, let's go into a screener here, one of my favorite places to start. So as you go into the screener, you get a nice screener here. Look, it pulls in a screener here. But what I want to cover today is to look at most liquid stocks. So with that, let's jump in here and go into, let's close this view or keep it as it is, and let's go into the view here. As I look at the most liquid stocks, I typically set my views. I have multiple way of looking at the market, and typically in this view, let's go into fundamental screener, so we can look at few fundamentals in the screen. And also we can go into the view here. In the view, I got a volume times price more than 500 million. I want to look at most liquid stocks. When you're looking at most liquid stocks, look at the volume times price. That tells you how much money is being traded on a given stock. So let's click on that here. Now you can see here, I can also sort this. Okay, it's already sorted by volume times price. So without any further ado, let's look at a few stocks here. Look, top of the list here, we got Tesla. Tesla is one of my favorite stocks to trade. Look, from a Tesla perspective, on Friday, look, the way to find out liquidity is to look at price times volume or volume times price. That's how much money traded on last Friday. Look, we got $17.96 billion traded in Tesla. That accounts for the highest dollar amount traded in the market. And next we got Apple here, $17.26 billion traded on Friday. And then you got Microsoft, which is very distant third, as you can see here. If you are one of the person who loves liquidity, look no further, and this column right here is your friend. Always look for liquidity, especially when you're trading or when you are trading options. Liquidity is your friend. You can get in, get out very easily. All right, now what we'll do is we'll go into a chart view and look at some of these stocks and see how to trade them. All right, so let's click on one of these symbol here, Tesla, and go into the chart view and go into more advanced chart view. All right, so now we got our more advanced chart view here, and let's bring it up here. All right, so we got our advanced chart pulling up here. And what I can do is I can go into a chart view, also click on this here, minimize the panel. Now look, it's just the way I like it. And I got not too many indicators. I got one indicator right here. This is where, as you look through here, and before I go into the indicator, let me show you my filter so that we can also do filter something similar to find out most liquid stocks. Look, from a filter perspective, it's very simple. I'm looking at all the stocks. There is no ETF in this list here. And look, from a volume perspective, I am saying volume. There is nothing much here, more than 50K. Not a big deal here. Market cap more than $2 billion. I want a little bit bigger stocks here. And average trading volume 30-day is more than 1 million shares. That's also pretty good here. We do want small stocks here. And as you can scan through here, we got average volume, and also important thing here, price, volume times price. I got here 100K here. So that way you can get some most liquid stocks here. It's a very simple scanner, nothing fancy here. And if you want to increase this, you could also increase this here. And let's go in here and let's see if we got all our scanners here. All right, from a scanner perspective, we got here price times volume more than 500 million. Let's see, let's go back here and let's see here price times volume. Price times volume here, instead of 100K here, let's make it a little higher. Let's go here. All right, we got 5 million here. Well, let's probably we can even go higher here, even say 10 million. So that's good enough here. We don't want to be too restrictive. That should be good enough. Let's actually save this also here and go from there. I could save this just by clicking right here and click on the save screen. Now my criteria, instead of 50 million, I think I have 5 million. I can just change this and go from there. Look, I got here 5 million. And go from there. I think I can even increase it a little bit. Let's go back to the filter here, and instead of 1 million here, let's make it let's make this say 20 million, even 50 million. Let's make it 50 million. And okay, now we got 50 million here, price times volume. We want to look at most liquid stocks, so that's why we don't want this 1Z 2Z here. We are looking at more than 550 million volume times price. Let's go ahead and save this here and go from there. All right, now look, we got only 692 matches, not a big deal here. You could even make it more restrictive by even doing it a little more restrictive, but let's go with this for now. Let's save this here. And look, now we got Tesla on the top here. From an indicator perspective, I love to keep it simple. I don't want to clutter too much here. We got just one indicator, as you can see here. And as you can see, I can go back to the indicator here. Look, you could just open up the indicator here, and the indicator I have is a very simple indicator, nothing fancy. We got technical indicator, which is a visible volume. This is a visible volume profile. I just put it up there, so that way we can look at the volume just by looking at the chart. It's a very intuitive. I love it. I love to put it on the left hand side here, so it doesn't clutter on the right hand side here. Look, Tesla, top of the stock here. What's going on? Tesla in a trading pattern. Look here, nice volatility box here that tells you at least right now Tesla is on the weaker side here. So that's why you got to be careful. Probably Tesla can break down here. Just to get better idea here, if you have TradingView Premium or a Pro here, you get to look at two charts. So what you could do is, if you have TradingView Premium, you could just click right here and look at two chart view here, so that way you can make some sense out of it. Look, from a two chart perspective here, we got a chart right here. We got a nice nice trading type pattern range here, as you see here. And I got a 3-day here. In the 3-day also, we can change it to Tesla instead of Blue Apron here. Let's go back and change this also to blue Tesla here. So with that, you can go here. Let's say sync layout, and symbol also we want to sync. So it's both are same symbol here. And we got crosshair as usual. So look, we got both Tesla here, and we can just close this. Look, we got Tesla both sides here. Look what's going on here. Tesla right now, it's in a nice volatility box, as you can see here. On the longer term, I got a 3-day chart on the right hand side here, and I got a 1-day chart, as you can see here. I can collapse this right hand side here, so we can look at a little bit bigger chart here. Look what's going on. So we got a nice base right here. Let me go here. Look, we got a nice range, nice consolidation base here around $200. So you could see Tesla can come back around $200. It's also in the cards, or even it could even go slightly higher, around say 220, 210. But 200 seems to be a good level. So that's why, even though in the shorter time frame you see a tight volatility box here, as you can see here, but in the longer time frame, you have a nice box here. Price can go to 200, as you can see here. That's why at this time Tesla can be slightly bearish by looking at the technical indicators. And you could also look at more details. You can click on this chart here. Look, you got TradingView is great. I love it. it kind of gives you a lot of statistics here. Days range here, it's on a lower side on the days range. That tells you it's a bearish on a daily range here. 52 week, it's somewhere less than half here, less than 50%. Again, slightly bearish on a earning perspective. Tesla is look, it's doing okay here. It's doing positive surprise, both from from a surprise perspective. That's a good here. They're doing well relatively, even though our earnings is slightly lower in Q2, but you got to compare to Q2 of previous year. Not too bad. So we got here earnings, then we got the income statement. I pulled up quarterly, but it's good to look at annual. Look, Tesla is doing great from an annual perspective. Revenue is going higher, which is good. Look, nice uptick here. And we got net income is also positive. That's a good sign here. And look, we can look at the performance, all not great off late here, but look, unlike most of the stocks here, in 1 year time frame, stock has done well. 6 months also is positive. And then you got a bunch of indicators here. Technically sell, fundamentally buy. Great, I think stock is doing well. So this way I pull up this chart here to make sense out of it. Then look, next is Apple. Apple is traded so much here. $2.2 trillion stock, as you can see here. Apple is on a negative trend. Look what's going on here. Nice negative trend in a daily chart, as you can see here. Look at those two ugly candles, mainly because there is some negative news around Apple's potentially softness in demand for iPhone 14. And as you look through here in a longer 3-day chart here, look, we got nice base here around 120 or so. So you could understand that 120 is also in the card. And we got one more nice base here. We can hit this base pretty soon here. So that's why even Apple, it's on a downtrend here. You could say make some good money going with the trend here. And then you got a few more here. We got Microsoft, one of my favorite stock here. Look what's going on in Microsoft here. Similar trend. Look at the negative trend. Microsoft is really going down, as you can see here. And as you look through here, a 3-day chart here, we got nice base forming here. Looks like this base is already broken. And next base could be right here, somewhere around 200 level here. With Microsoft, that's why you got to be careful here with these big tech stocks here. So they are starting to show some weakness as we go forward. And then you got a few more here. You got Nvidia, which is next highly liquid stock, as you can see here. Nvidia is already broken big time. Its stock is down, as you can see here. Look at the downtrend in Nvidia. And look on the longer term here. We got nice support level in Nvidia here, 120s or so. If this level can hold, stock can go higher. But look, we got next level coming up somewhere here around say $90. So I'm hopeful around $100 it might hold up here. Chart is really ugly here. Look, line of control, point of control here at 175. It's below 175 right now. Next point of control in the longer term chart is around $50, as you can see here. So you got to be careful here. And we got some more here. We got Amazon.com, one of my favorite stock here. This one is a little more stronger compared to others, as you can see here. Stock is still down, as you can see. Look, stock is coming down bearish. And it's got nice support level here. It's did not test the support level here yet, around 102. It's kind of bouncing back slowly, as you see here. And we got AMD completely beaten down, as you can see here. Look at AMD, somewhat similar to Nvidia here. Look, nice downtrend here. Look at the it's year to date. Look at the year to date pattern in all these big names here, down big time. All right, now you found out how to look at the most liquid stocks using TradingView. And look, I can collapse this here and just expand the view here. Look, we got most liquid stocks. Don't try to trade all the stocks look at the most liquid stocks. It pays to trade the most liquid stocks. I normally don't look at all the stocks. When the market is tough, I look at most liquid stocks and trade them. That's one of the better way to make money. And more importantly, look at the trend. Right now, as you looked at, trend is negative. Go with the trend. Don't fight the trend. That's one mistake folks make. They are always optimistic. They will think tomorrow stock will go higher. Look, right from January this year, every day is a slow grind towards a downward here, mainly because Fed is not our friend anymore. All right, now you've understood this. You might wonder, hey, what should I do? How should I trade? Look, let's look at one or two here. You'll get the idea. Look, first is Tesla. Even though TradingView does not have all the details of option trading, but when you look at the most liquid stocks, you're almost sure these are very good for option trading also. Let's first look at Tesla here. Let's go back to one of my favorite tool called Option Strat. I can go to Option Strat here and look, when you know the stock is in a downward trend, what you do is you go to the optimize here. So in the optimize tab here, you can put your symbol here. Right now my symbol is Tesla, which is most liquid stock, as you all know. As you put in Tesla here, Option Strat asks you, hey, you know what, are you bullish, are you bearish, or is super bullish, super bearish, so on and so forth. Right now I looking at Tesla, I know I'm bearish, so let me click on bearish here. So let's look at the bearish strategies. From a bearish strategy perspective, there are a bunch of strategies, as you can see here. Look, the option strat will automatically tell you, what if you're bearish, what could be your price target. Look, Tesla currently it's at 265 here. Next move on the downside, if you're bearish, could be around, say, 217. This is by looking at the market maker move. It's a negative 18%, as you can see here, from the current price target. That's our bearish price target for Tesla. And look, for this bearish target here, you could play various strategies. And look, from a strategy perspective, you have a long put, meaning you are buying a put option here, or you could buy a bear call spread, or you could do a bear put spread here. And if you don't have too much money to play with, and if you want to, or if you don't want to spend so much money, you can go into one of these spread strategies here. One of my favorite strategy is to go with the bear call spread strategy. So you don't make too much money here, but the bear call spread is working out pretty well in this market. You could also go to bear put spread here. For now, let's go into bear call spread here. Look, from a bear call spread perspective, one of the reason I love bear call spread here, look, you got a nice return on risk here, 350% return on risk. You got nice 3,500 profit here. You got 35% of chance of break even here, which is not bad here. And look at the money you're putting into risk here, just $1,000, and your maximum profit level is around 3,500 here. Now, that's a good way to go. And look, we got put spread here. Again, you're putting a little more money to risk here, money on risk here. And look, actually your risk is very low here, and chance is also low here. So with that, let's do one thing. Let's look at some of these strategies. If you don't want to spend too much money, I recommend in this market, go with the bear call spread to begin with. Let's look at bear call spread here. Let's open up with the option strat visualizer. Look, as you go into option strat, let's go into the graph, which is one of my favorite way to look at this. Option strat will automatically suggest what bear call spread you can do here. Look what it has done right now. It's basically has gone 6 days expiration cycle, expiring on It's basically expiration is 6 days here, and look, we got 7th of October. 7th of October is highlighted, which is 6 days out. So, and it's also suggesting what you can do here. What it's suggesting is really, even though Tesla is 265, as you can see here, you could do 265 right now. 265 call you can sell, as you can see here. Actually, you can buy here. This is a buy. You buy 265 call, and look, you're actually selling a 220 call. That's what it is suggesting. If you're bearish, you could sell this 220 here, and you could buy 265. So net credit you receive is a nice money here, 3,560, and your margin, estimated margin requirement is 4,500. Your max loss is 940, and max profit is very good here, 3560, and chance of profit is 36%, and your break even is below 255, as you can see here. So this is if you're bearish, if your hypothesis the stock will go lower, and many times you don't want to take so much risk here. What you could do is you could lower the spread slightly. Right now, look, we got a nice spread, 220 to 65. That's a very big spread here, and you'll end up holding around $4,500 as your collateral, and this is going to be your buying power reduction. If you don't want to spend so much buying power here, you could do one thing. Look, stock price is 265 right now. Instead of buying 265, you could even go into 270, and you could come back here to 260 or so. This is basically you're paying the $10 wide spread, as you can see here. Stock price is 265. You are just doing a $10 spread. You're buying 270. You are basically selling 260, as you can see here. In this spread, it's a very $10 wide spread, as you can see here. Your net credit, the money that you will receive, is 530. Your margin requirement, look, margin requirement is drastically low right now, just $1,000. Your max loss is also reduced here, 470. Max profit is 530. You're almost doubling your money. Look, your chance of profit is 50%. This is one of my favorite strategy of late here. You'll make some good money as market is grinding down. You can just you can make some money in the meantime by just selling. Look, we are only selling 7 days out here. We are not taking too much risk. And if you want to make some more money, you could even go maybe say October 14th here. Now we are going 13 days out. Same strategy here. Look, here we're also doing something similar here. Same strikes, as you can see here. Look, we are net credit is 535, max loss is 465, margin is same, as you can see here. Now our chance of profit is also 50%, and as long as stock stays below 265, which is the current price level here, we will break even below the 265 mark here, which is a good strategy here. You could go with this. And one more thing I love about this option strat is, look, they got these lines here. Look, we got a nice line here, red line, that tells you there is a nice put volume at these levels here, and we got some nice big line here that tells you on the call side we got nice volume here. So the moment you know this, you kind of get an idea. So you could argue, in the options market, folks are betting Tesla will go higher, around 300, and they're also betting Tesla will go lower. Look, we got some big candles at 270 and 250. We got big candles. That's why there are also bears who are betting Tesla will go lower also. So this is how you kind of trade this, and you can also go into my favorite platform, Thinkorswim, and find out some of these numbers here. Or we could jump into my spreadsheet here. Look, we got a nice spreadsheet that I compile. looking at multiple places here. I could go to auto filter and I could go to Tesla right here. I could say choose equal Tesla here, and let's see what's going on with Tesla. All right, so we got Tesla here, and look, Tesla right here. And as you scan through Tesla here, look, we got some some put options. Looks like we got some call options which are bull and nice volume, as you can see here. And look at the call premium. Look, there is somebody who did a nice spent nice money here. Call premium is 1.3 million. And look, as you scan through here, it's a monthly expiration cycle here. And strike price 290, current price is 265. Looks like somebody's really bullish here. They're basically doing call trading here. And strike price 290, which is above, and expiration next 20 days. They're spending some nice money here. So there is a good chance that Tesla can go higher. That's why they're putting so much money. Even though Tesla is 265, they're putting some money here. As you scan through here, we got one more big trade here. Look on this trade here. Look at the premium, $5 million premium here. And on this one here, strike price 30. And look, it's 6-day expiration here. Somebody is putting a lot of money here. Even though stock price is 265, there's putting a lot of money here at 300 strike price call option here. On the put side also, look, there is a nice 6.9 million premium here for a put option with the 300 strike price here. Probably somebody's thinking stock will go higher. This is a bull trade here. Probably they they are buying this put option here. That could be the case here, thinking stock will go higher. So with that, we got equally bull and bear here. So you could make some trade here in Tesla. With the bearish trade, with the market trending down here, this could be nice bear call spread here, and to put some money in your pocket. As you can see here, it's a net credit trade. All right, so we can go back here and we could look at a few more trades here. Let's close this here and look at Tesla again. We can look at bear put spread also. As you look through here, bear put spread here, we could go into Tesla again, 265, and our thesis is a bear thesis, and trading strategy is telling you could buy 250 put. Look, 250 put here by paying $4.70, and you could buy a 220. You could sell a 220 put here for 68 cents. If you do something like this here, your net debit, this is a net debit trade. You have to put around $402. That's your max loss, and your max profit. Look, all the debit spreads will have more max profit potential here. But chance of profit is slightly less here. That's one of the reasons in this market I typically like to put some money in the pocket by trading a call bear spread here. You could also do put bear spread, but you got to be slightly careful here. Look, stock price being 265 here. One way to do this trade, typically I like to go one leg up and one leg down. So look, stock being at 265, you could put this leg here slightly, maybe say 265 itself, or even 270. You could play something like this, 270 and 260 here. If you do something like this, your it's a $10 wide spread. Your net debit, as you can see here, 467. Max loss is also same thing here, and your max profit is 533. And now look, your chance of profit increased here from from 22 or so before to 50%. I think it's a good one here. As long as Tesla stays below 265, there's a good chance in the next 7 days you will make this cool $533. That's why don't fight with the trend. Go along with the trend, and in this market you could do bear put spread and keep putting money in your pocket. All right, so now if I go back here to the chart here, we could play the same thing in Apple. Apple is decisively downtrend, as we looked at. Microsoft, same story, decisively downtrend. You could play same strategies here. If I go back here and if I go to option optimizer here, and I could do same thing here. I could go here and go to the optimize tab here and put my symbol, in this case Apple. Look, Apple, we got a bear thesis with the demand slowing down on iPhone 14. I can go here and say bearish. I don't want to be very bearish on Apple. Let's say bearish here. The moment is a bearish trading option strat comes up with the price here, say it says minus 5.5%. that's a bearish. And if you do very bearish, it's about 18%. If I click on it here, it does about 11% in Apple. I would probably go with the bearish strategy in Apple here. And you could do same thing here. You could go with the bear call spread, as you can see here. And look, it already suggested us here with a nice trade here. It's telling you can buy 141 and you could sell 137. So what I would do is really I would maybe go with the $10 wide spread, so we could make some money here. Instead of 137 here, I could even go to say 131 or 131 here. Now it's a $10 wide spread, as you can see here. So you could also do maybe 132, and you could move this slightly here to 142. It's again $10 wide spread. The moment you do this here, look, your net credit here is $595. You get $595. Estimated margin $1,000, mainly because it's a $10 wide spread. The moment it's a $10 wide spread, it's $1,000. Your max loss is 405 here. Max profit is 595. That's a good deal here. You're really you're making nice money here. You're almost doubling your money. It's a good trade here. You could go with this. Your chance of profit is 49%. Not too bad. It's a good trade to take here. You could go with this here. And we got a few more here. You could look at similar strategy in other stocks. If we go back here to this one here, we got a few more here. You got Microsoft. You can play the exact same strategy in Microsoft. You could go back to my favorite tool here and put Microsoft. With Microsoft, you could do same thing. You could do either bearish or very bearish. Let's go with the bearish for now here. You could do bear call spread, my favorite strategy. And look, it already suggested us 245 to 225 here. You don't want to be taking so much wide range here. You could do say 232 right now. You could do 235 and you could do 225. $10 wide spread here, as you can see here. And look, your net credit is 648. Your max loss is 352 and your margin is $1,000. Not too bad. Look at your max profit, which is same as money you collected. You can go something like this here. And look, your break even is 46%. Not too bad. As long as stock is below 231, you'll make money. Microsoft, as you see here, showing some cracks. So that's why this could be a good strategy. So with that, we'll probably conclude here. You get the idea. Don't fight the trend. Fed is going to be aggressively increasing the rates for some more time to come here. That's why play along the trend here. Bear call spread is your friend, and go with it. Don't fight it and make some money. With that, thank you very much. Happy investing and trading.